The reversal is looking better every single day. When we are looking at the market right now on the daily, it doesn't look all that good because we still have a lot of altcoins that are down, like XDC, HBAR, Ondo, XLM, and many others. However, we are still seeing a big bounce across the board for a few altcoins, and we're seeing still Ethereum and Bitcoin trying to bounce back from the lows as well. Currently speaking, Bitcoin hovering around almost 112K still. Ethereum around 4,400, XRP around $2.84 roughly. Across the board here, not a crazy big gain in the market, but we are starting to build a floor, which is exactly what we wanted to see on the charts anyways, which we'll address here in a moment. On the weekly, we are still seeing some nice gains. A lot of the moves right now are coming from centralized exchange tokens, like for example, KCS or even BGB. This kind of goes hand in hand with like what we saw with Crow. However, Crow is now down on the weekly, but OKB is up in a big way. If we're actually looking at the monthly gains, we could see OKB, which is the OKX token, that's up 292%. Crow is up 90, almost 4% on the monthly as well. Qcoin up 44%. So a lot of the gains right now are coming from centralized exchange tokens. You could call this market manipulation, right? Some people are pumping these coins to, highs that we haven't seen in quite some time, which is causing a little bit of, excitement in the centralized exchange market. But this is also due to the fact that we are starting to see retail coming back slightly. They're not here in a huge way. And I know that you guys probably think, well, Nick, you've been saying that retail isn't here in a huge way for quite some time. Well, the biggest move that we saw from retail was back in November into roughly January. But after that, they got wiped out because for, technically almost 8 months now, they've just been dealing with the worst price action, the most boring price action. I mean, even going into April, right? From January all the way into April, we just sold off like 70+%. Altcoins dropped almost 80% plus. So they got completely wiped out. So the fact is, today, we don't have a massive amount of retail participation in the space, but that's going to change here very soon, in my opinion. Now, if we're looking at the Fear and Greed Index, we are now back to 44. We are bouncing off the lows because, again, we're starting to build a floor on Bitcoin. We're starting to build a floor on Ethereum, and a lot of altcoins like even XRP are starting to bounce here slightly, which, again, is a good sign of a possible much larger reversal. If we're looking at the crypto market itself, 3.87 trillion. If we're looking at the bottom, right, this is the low, 3.72 trillion. We've added about roughly over $100+ billion into the market, which is very good to see. It means that people are buying up in a big way. Ethereum on the daily is outperforming Bitcoin again. Bitcoin ETFs did see a larger inflow into them over Ethereum, which technically is a good sign because it means that Bitcoin is starting to get a little bit more hype around it, which can definitely support its push back to 112K plus. Then also the altcoin season index is now moving slightly higher to 53 out of 100. So that's telling me that altcoins are starting to show a little bit more strength here. And again, this is also in part with Ethereum outperforming Bitcoin on the daily. With Bitcoin, this is what the 7-day span looks like. We did break over 112K slightly. It was 112.6K. Pretty good move, pretty solid as well. And then also on the chart, this is what the daily looks like. Again, we're closing right around the red zone, 111.7, almost 111.8K. This is slightly right around the May resistance levels anyways. So we need to break over that, right? So this is why I have this red zone here, because even if we do break over the May highs, we're still not 100% out of the water yet, right? We still need to break over the August highs. Well, it's technically not even the August highs. It's our previous highs from August 28th. And then we need to actually clear all of these highs. So the high from the 22nd, and then the high from the 14th, which would be a new all-time high. So we're still looking for that higher high to be printed in on a Bitcoin. But so far, we have some pretty solid moves here happening on the daily chart. If we're looking at the 3-day looks a little bit better. However, we're still kind of weak here. I would like to see a little bit more, which is why I'm not like 100% certain on us being fully bottomed out here. We need to be a little bit more patient, especially leading into the FOMC meeting, because I'm just going to be honest with you guys, leading into that September 17th meeting, we're going to see volatility kick up in a significant way. We will also see major liquidations, because a lot of people like to bet big on what the Fed is going to do. And we typically see, pretty big swings every single time that we have an FOMC meeting. But with Ethereum, again, Ethereum is kind of in the same boat where there hasn't been a big change on the chart, but we did get a nice reaction off of the lows. So it kind of feels as though, we're going to maintain these lows. We do technically have a higher high going off of the 31st and the first candle body closes on the daily, which is a very good sign. We are still finding resistance right around those candles going back to the 17th and the 18th. If we can clear this, we could start to build and really clear a path to, some of these other highs on the lower time frame structure, which will get us back to 4,800, almost 4,900, which will be a new all-time high on Ethereum on a daily candle close. We want a daily candle close above 48.84, which is the 2021 all-time high. So again, Ethereum looking pretty good here. And then, of course, I know XRP, right? Everyone is concerned a little bit about XRP. We're still trading around like $2.80 some cents. Guys, there's no change on this chart. There is absolutely no change on this chart. We still need a lot more out of XRP. It's going to be pretty rough. It's going to be pretty boring until we start to see a much larger push here. I would love to see us reclaim the midline. I want us to actually break over $2.96, clear that, and get back to this $3.08 level. If we could clear that, then I would be very bullish on XRP on the lower time frame structure. Right now, I'm pretty neutral, right? Especially until we lose the $2.75 level on the daily. If we lose that, then I flip bearish. And the bearish levels that I have outlined are down here, $2.36 roughly to $2.58. Anywhere within this range is a good buy opportunity, in my opinion, especially on these lows if we do see it. It's questionable on if we are going to see a bigger impulsive move on XRP here. Like I said, the main focus here is still Ethereum and Bitcoin, especially at a time where Bitcoin dominance is, still around 58%. And then also, Bitcoin dominance, 58%, Ethereum dominance around 14%. These both have been pumping. But now, as you guys can see, it's kind of the inverse reaction on Bitcoin dominance with Ethereum. We have 2 weekly candles in a row where we have some bullish price action on Bitcoin dominance. And then we have 2 weekly candles in a row where we have bearish price action on Ethereum dominance. This is why, we focus on Ethereum outperforming Bitcoin, because the higher that this goes, we will lead into this red zone where I do think that Ethereum dominance will most likely start to get a little bit weak. And instead of Bitcoin dominance gaining against Ethereum, we will start to see others' dominance, which is the altcoin market, gaining against Ethereum. So we won't see the inverse on this chart, which is Bitcoin. We will see the inverse on the altcoin market. But the biggest thing that we are focused on right now is the Fed going to make us rich? I do think that the Fed is about to make us very rich, but it does come at a cost. We have over here, the US Treasury buys another $2 billion of its own debt. This is QE without the Fed. The Treasury has been doing this for quite some time now. I think that this is the second or the third time that they have done this year. I might be wrong on that. It might be even more. But I've been watching this for, a bit of time. And I also did make a post. I don't know if I posted it as media on X, but we were talking about how the Fed is secretly injecting liquidity into the market. I know it's a little bit of an older post. If you guys do look it up, you guys are more than welcome to find it. But, the Fed has also been injecting liquidity into the stock market. They've also been injecting liquidity into a few other markets as well to really kind of keep them afloat, which tells us that both the US Treasury and the Fed is essentially, utilizing liquidity that we don't have, that we need to print, which is QE, right? Now, you might say, well, this is QE without the Fed. Well, the Fed is also doing this as well, because we know that the Fed has been doing this for over the last couple months to, prop markets up. We mainly look at the stock market. So again, if we're looking at this is $2 billion. What is the Fed going to do next? We're coming up on the FOMC meeting. The Treasury is buying up, billions of dollars. Well, we need to make borrowing the money cheaper, which is cutting rates. However, we're still looking at, the 10-year. We're looking at, how the market looks. Again, the payments on the debt is surging more and more. So we're at this sticky situation of, what does the Fed do next? Well, I think that there's an immense amount of pressure on the Fed to cut interest rates, but it does come at a cost, which is the fact that the debt repayments are going to become even more expensive. We're in this debt trap where we're never going to offset the debt. It's going to continue to surge more and more and more. This is why owning assets is so crucial. This is also why I've always said, we shouldn't be in a rush to sell crypto, sell gold, sell silver. We should be holding these things because we know that the Fed is going to continue to print more money. We know that the M2, supply is going to continue to explode. And this is just going to make these assets more and more valuable. So if we're thinking about what's happening this September, markets are now looking at a 97.6% chance of a Fed rate cut. We have been watching this just recently, and I think that this was from last night. This was at 92%. Now it's at 97.6% of a chance that we get a rate cut on September 17th. This is going to erupt markets even higher because what this gives us is clear confirmation that the Fed is going to print more money. They're going to print more money. They're going to flood the system with more liquidity. This is going to prop markets up even higher, but it's also going to make assets even more expensive because, again, this is bearish for the dollar. And what's bearish for the dollar is bullish for risk on assets. It's also bullish for specific assets like gold and silver. I mean, guys, just take a quick look at the global M2 supply. Everyone is printing money right now, and so is the US. The US, if we're looking at the last, major release, we're at $22.12 trillion. Guys, go back to the beginning of this year. Here we have the end of 2024. Since the end of 2024, the US M2 supply is up by 2.64%. equivalent to $570 billion printed already this year. We are on track to print $1 trillion this year completely, added to the M2 supply for the US. And with Fed rate cuts, this is going to cause this chart to go even crazier. How do I know? Well, go back to the first rate cut of 2024, which was September. Here we have September. By October, just to kind of show you guys this is why, we focus on rate cuts. By October, we already added $83 billion to the M2 supply. By the end of the year with rate cuts, we added $330 billion. We're talking about in 3 months adding almost $34 billion to the M2 supply. Almost $100 billion per month being printed. That is ridiculous. So if we're thinking about this, yes, the Fed is going to make us rich, but it comes at a cost. And we need to focus on this because it's not going to be free money. Things around us are going to continue to rise in price. I mean, everything around us is getting more and more expensive. This is why owning assets is not, a life sentence. It's a privilege, right? We have the disposable income to buy these things, to hold them, to gain value on, so that we can utilize that value that continues to go up to offset the cost of things around us going up as well. So again, owning assets is so crucial at this point. We're in this debt cycle. We're in this endless debt cycle. This is going to cause the markets to erupt even higher. I'm not too concerned at all with the overall market look currently. I'm actually very bullish going into, the September 17th meeting. And I think that the rest of September is going to be extremely bullish. I think that this entire year for crypto is going to be a very, very exciting year. I mean, we only have, a few more months left, but I think that that's all we really need. I mean, just go back to 2021 and look at how many months that we pumped for. It was about 4 months. That will take us into January, February of, 2026. That's just enough time for us to make as much money as possible, take some profits, keep some assets on, the board as well. Moon bags are always crucial. So, with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.